What is gap up and gap down in trading? In this video I will teach you how to trade gap up and gap down after the market opening. You will learn why such gaps occur, and I will teach you a simple and profitable strategy for trading gaps on Forex, gold or any other financial market. And as a bonus I will share with you a recap of a real gap trade that we took with my students in my trading academy. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. And first let's start with the theory. A gap up after the market opening is the situation when the market opens higher than it closed without any trading activity in between. You can see the example of the gap up after the market opening on Euro-Pound pair. The level where the market closed is called the gap opening level, while the level where the market opened is called gap closing level. A gap down after the market opening is the situation when the market opens lower than it closed without any trading activity in between. Here you can see the example of a gap down on WTI crude oil after the market opening. Why such gaps occur? There are a lot of reasons why opening gaps occur. One of the most common one is the release of the positive or the negative fundamental news while the market was closed. The market opening price will reflect the impact of this news, causing the formation of the gap. For example, the gap up that we spotted on a Euro-Pound pair was formed because of the surprising results of the French elections during the weekend. And when the market opened on Monday, the results of the elections were immediately priced in by the market and the gap up was formed. And the gap down on WTI crude oil was formed because of the sudden decision of OPEC to increase the production. The decision was made on weekend, and when the market opened, the market already reflected this news, and for that reason the gap was formed. And what does gap opening mean? Gap opening reflects the sudden change in the market sentiment. Gap up will indicate a very bullish sentiment on the market, while a gap down will imply a very bearish mood of the market participants. However, the markets do not like the gaps. With a very high probability, the gaps are filled by the price very quickly. And we say that the gap is filled when the price returns back to the gap opening level. You can see that after some time, Euro-Pound pair dropped and the gap was filled. The price returned back to gap opening level. Such a pattern is very reliable and consistent among different financial markets. For that reason, it can provide profitable trading opportunities for us. The same thing happened with WTI crude oil. After the market opening, the market was coiling for some time and then the price went up and the gap was filled. And now let's discuss how to trade gap opening. First, we will discuss gap up trading strategy. Once you spotted a gap up after the market opening, we are expecting that the gap will be filled. But before you open a short position, you should analyze the price action and wait for the signal before you sell. You should look for a clear sign of strength of the sellers. One of the most reliable bearish signals is the formation of a bearish price action pattern. You should look for a double top pattern, head and shoulders pattern, triple top pattern, the symmetrical or descending triangle, the inverted cup and handle formation, or the rising wedge. Bearish breakout of the trend line or the neckline of the pattern will be your signal to sell. Let's study the price action on a Euro-Pound pair before it filled the gap. You can see that the price formed a beautiful double top pattern formation. And for us, a clear bearish signal was a breakout and hourly candle closed below the neckline. No matter which bearish pattern you spotted, your stop loss should lie above the highs of the pattern. Your safest entry is always on a retest of a broken neckline or a trend line, and your take profit level is the gap opening level. Safest entry point on a Euro-Pound pair was the retest of a broken neckline of a double top pattern formation. Stop loss was placed above the highs of the pattern and take profit was the gap opening level. Now let's discuss a gap down trading strategy. Once you spotted a gap down after the market opening, you should look for a bullish signal, a bullish price action pattern before you open a long position. Because once we spot a gap down, we anticipate that the gap will be filled. And here are the bullish price action patterns that you should look for. You should look for a double bottom, triple bottom, the inverted head and shoulders pattern, cup and handle formation, falling wedge, the ascending triangle, or the symmetrical triangle. Bullish breakout of the trend line or the neckline of the pattern will be your signal to buy. Let's study the price action on WTI crude oil before it filled the gap. You can see that the price formed cup and handle formation. And for us, a clear bullish signal, this sign of strength of the buyers, was a breakout of a neckline and the candle close above that. Again, I set a stop loss below the lows of the cup and handle formation. Entry was on a retest of a broken neckline, and take profit was the gap opening level. And now let me show you a real example of my gap opening trading strategy. It will be based on a recording of live streams with my students. So on euro dollar pair, we can spot that the market opened with the gap up. You can see that here we formed a huge gap up. And as you know, there's always a very high chance that the gap will be filled. The markets do not like these gaps and they tend to fill these gaps. And for us, such gaps can provide profitable trading opportunities. And once you spotted the gap, you should patiently monitor the price action after the formation of the gap. Usually after the gap is formed, after some time, the market may easily keep rallying for some time, but at some moment the market may form a bearish pattern. You should look for the sign of strength of the sellers, you should look for some bearish pattern, and on the euro dollar pair, we see some bearish pattern on an hourly time frame. We can spot that here the market formed a double top formation. You can see that the market nicely respected the neckline of the pattern for quite a while. It was a strong minor structure support. And you can see that here we violated the neckline of the pattern. We violated that minor support. And that is a very important sign of strength of the sellers for us. It indicates that finally sellers started to sell the pair, and it increases the probabilities that the market is now preparing to close the gap. And for you, the violation of the neckline here, the bearish confirmation, can give a very nice signal to short the market. You sell the market on a retest of a broken neckline of the pattern, and you anticipate the gap to be filled. So you analyze the gap and you simply look for the point, the area where the gap was opened. You should find the gap opening level, and gap opening level will be the target for the trade. And after the market fills the gap, it tends to return to a bullish trend again and go higher. As you remember, yesterday we decided to short euro dollar. We spotted the gap up and we predicted that with a very high probability the gap will be filled. And I'm happy to see that yesterday the release of the yesterday's fundamentals was very bearish, and because of the yesterday's news the market dropped, and today in the morning the market reached the target. Always remember that the probabilities that the gap will be filled are very high. However, it is not clear when exactly it will happen. For that reason, you should carefully analyze the price action and wait for a signal before you open a trading position. That will be your best gap opening strategy. Let me know your views in the comment section if you have any questions. Also, if you want to see how I trade my trading strategies live, join my trading academy. For more info, check the link in the description below. Also, traders, do not forget to watch my other videos.